What's going on, everybody? Welcome back to Fox Sound Finance, where we analyze the stock market using technical analysis. Please understand that I'm not a financial advisor. Nothing in these videos is financial advice. Please do your own research and buy what you want to buy. All right, guys, it has been about 2 to 3 weeks since I last updated you on the AMC situation and really overall market situation. But I've been extremely busy with some home projects, and I do not like to be spread thin or putting less quality into my other work here, which is the charting and, the whole YouTube process and everything. So I like to make sure I'm delivering quality content. So if I can't do that, I'm not going to upload. And honestly, there was really nothing major, groundbreaking that's happened. There has been some things I'm going to review, but nothing really catastrophic. And if there was, I would definitely race and try to get a freaking 3-minute highlight drill video in. And that was not necessary. So nonetheless, I'm here today and I'm going to give you guys an update. It is Friday, so market is over with, and we will dive into several topics. So let's just give a rundown of what that's going to look like today for our agenda. Again, primarily just going to cover AMC. I'm not going to cover any of the other ones right now because the video will be about an hour and 20 minutes long, and I do not want to do that to you guys. All right, so we're going to cover AMC's latest earnings. We're going to cover the financial situation, the ongoing concerns around my favorite term now, MNPI, okay, the material non-public information, or I should say lack of, from Adam Aaron. We're going to talk about that and the feelings behind that, the Odeon debt restructuring that was just announced. We'll dive into the GME situation a little bit because we have not gotten any concrete evidence of what they're actually going to acquire company-wise, which I find to be interesting as well because still there's been nothing. The impact of the Iran war and the broader macro pressure of that, and then also too a little bit of the Warner Bros. Situation as it's not totally been finalized and there are people fighting it. The Justice Department, I believe, is getting involved in it and several other entities. So we're going to break that down and then jump into RTA like we always do. So first things first, let's start off with the earnings, okay? So AMC's 2025 results show that the company is still under pressure. Obviously, we see that. The revenue held up relatively well, but AMC still posted a large net loss. But the key thing to understand, guys, is that the losses were not just about the theater operations themselves, okay? Financing costs and debt-related charges were really more of the major part of the issue with the losses, okay? And I'm going to break that down. So overall, the business is improving in some areas, but the balance sheet is still a major issue, particularly with the debt, okay? So let's take a look real quick at let's go with the annual real quick for net income, all right? I said this in prior videos when I started my channel that I want to continue to see this progression where the net income starts to leave the negative, right? It was drifting. If you look at 2021, negative 1.27 billion in losses, but then it just started getting a lot better, right? We were at $350 million in losses in 2024. However, 2025, it was a $630-ish million loss, all right? Now, if I go back and I break this down to the statement here, you can see, guys, on here for the year, where is it? Unusual expense and income, I believe, was when they did the debt restructuring, okay? So when they restructured the debt, I think that was in 2025, right? For the 2026 debt that was due by the end of 2026, I want to say. That was obviously like if you're going to refinance anything, you're probably going to have to put some kind of money down. And again, this is a massive, massive entity. So you had to do $250 million, I think, for refinancing that debt, which is probably what a lot of the dilution money raising went to, right? And then you look at the interest right here. Interest right here, negative $341 million. So really, if we look at this, AMC's net operational loss was $220 million, okay? That's to break it down simple because, again, I could go through all these numbers, but really $220 million negative. Negative $220 million right here was the operating income, right? So when you throw the interest in there, that's where things start to get ugly, okay? So the interest payments is actually outweighing the net loss, believe it or not. The operating income is not really the total issue. And that's why when I break down the next segment, which is our Odeon restructuring, they're trying to push the 27 due debt to 2031. All right. And obviously they're going to get a better interest rate because when they go to do that, I think they're saving like 2% on the interest or something like that, which is pretty significant for that amount of cash. So if they can do that and also push it out further, that's going to buy like another, 4 or 5 years, okay, from now for when the next amount of debt is due. All right. And it's going to limit those debt interest payments. So that's what I want to drive home is that it's not like an operational negative $630 million loss. It is, you have to pay the damn interest, okay? Just imagine the worst credit card possible is super duper high interest, right? And then finally, interest rates drop or something, or you get a new card or whatever, and, or a new type of loan or refinancing, and you're going to save, 5, 6, 7% or something. It's obviously going to make a difference in what payment you owe on that, right? Simple, stupid shit. So that's really kind of the driving force, I think, with the losses this year is the fact that they refinanced and then had more money due, right? So if we break it down just simply like this, if I pull my calculator out on an operational expense level, 220 divided by 4 quarters, on an operational level, they're losing $55 million a quarter. All right. So not actually terrible when you think about it. 220 million on the year, actually not really terrible. If they can just get the debt restructuring handled, and then we can start to see the bounce back with the rest of the movie slate. I mean, I think you have a pretty damn good chance of getting those payments not only paid, but maybe getting a little extra profit on top. All right. But again, we're going to need to see, I talked about the box office. Like, we're going to need to see that get up to like a 10 billion, maybe $10.5 billion number so that we can cover the debt interest payments and also, get a little cherry on top with profit. Okay. And they're also going to be closing theaters. So that's the other thing is they're going to start trimming the fat where, a lot of these operational expenses are bleeding out, right? Where it's like we're losing just keeping them open. So that's also going to be huge. So we'll pay attention to that, but I didn't want to spend 25 minutes explaining that, all right? But that just gives you a breakdown of kind of what is going on with the earnings. And again, the material non-public information, he didn't really explain anything. It didn't really allude to it. And that's kind of a little annoying because you can't like hype this up about this big idea that you have. But in the same vein, I think about what I said last video to you guys is that in May, the new Fed chair is going to start. Okay. I went back and looked at it. In May, the new Fed chair is starting. So I do think that there's a lot right now happening, a lot of the negative, a lot of the consolidation, a lot of the cooling off is happening now in anticipation for that big giant run that's going to happen. Because when this guy comes in and then, his first day, he could come out and say, yep, going forward, this is the plan. We want to cut the interest rates by X amount or whatever. This is what I'm going for. I think the market's just going to react to that. I know it's kind of lazy, but that's just my thinking because of what he's going to embody being in this position now. So if that agenda is closely related to Trump's, then I know that that's probably one of the key catalysts. And again, my charts line up for that date, and I will break that down. Jumping into the GME situation, again, there's a lot of speculation. They haven't really hardcore, concrete announced what they're going to be buying. And again, GME's been also trading in the range, right? And there's an apex point on that chart as well. So I just find it interesting that, again, there's been nothing solid yet, even though he came out and it seemed like at any moment there was going to be something announced, but we haven't heard anything yet. So again, timing is everything with the charts. And then I also find it funny that, not really funny, but again, this Iran situation and the timing of it is because like we are in this sort of flat cooling off period. And what better to have is front and center a war with Iran, right? And that's been the big talk. So again, I don't buy the news like and treat it like the gospel, but it does have a role in the chart. And when you look at the charts and you line it up with the news, you can almost see them go hand in hand and what cycle we're in. All right. And it was already looking like this way anyways. I showed you guys my charts and that we're not even close to getting to that breakout point. We're close, but like we have levels to go through, I should say. And that was just another thing I wanted to point out. The next one was the Warner Bros. Deal, okay? When we look at that, not totally being finalized yet, there's still some lingering speculation behind that. Is there going to be anything that stops the deal from fully going through or reversing? Like, there's a lot of this stuff, guys, up in the air, and I just think that this is all kind of like in that, again, consolidation mode, because of everything going on and what's ahead. All right. So those are just some of the key things I wanted to rapidly try to rip through. Again, I could do a video per fucking one of those topics, and I'm not going to do that. But that's just to give you a little maybe a little bullshit summary of what is going on out there in the world and what does it mean right now for us. Okay. But, the financials is certainly something I think very important to bring up. For my new people jumping into the TA now, these three red lines are our macro resistances. Okay, these are key levels we got to break if we want to see impulsive moves to the upside. Let's just leave it at that. Okay. On the bottom, you have your weak, really thin supports. And again, we're trying to find a true bottom. All right. And last video, I went over this. I explained this. If I look here, this channel right here that's been created, we've had the price action just bouncing around inside of it. Seemingly what's going on forever. And then this last arrow here that I left was our, I think this is the last video I did, 213. All right. So that's where I left you guys off. And since then, we were at, I think the candle closed, what is it, at 123, we'll call it. And then we had a trickle down. Had a nice little bounce here from, what, $1.10. We bounced up to 125. That was cute. And then, boom, back down to currently we're at around 108, 109. All right. So I've descended to the depths of hell even further. If you look at the setup right now, what I'm noticing, what I tell you guys about this 1188 resistance line, you see how it's ripped through? Well, finally, we are seeing we're still going down. Okay. Yes, we've fallen down, but look at this now breaking out to the side. So we have now surpassed this resistance line to the side, and I kind of thought this was going to happen based on what was going on here. You can see that we have rejected. We'll pay attention to this line first. Rejected it, couldn't break through, fall down, reject, break through, fall back down in it, and then we have broken down sideways. And even though we have descended, you've not fallen below this red line. All right, that'd be very catastrophic if we did, because look at the freaking levels now down there, 64, 65 cents. Not what we want to see. Like we really want to get to this point where we see AMC trading flat. All right. And I mean like flat, not like flat down. We really need to see this like sort of accumulative type of setup, because once we see that where it's trading in a range but going sideways, that's when you can tell that it's being loaded up on, right, by bigger institutions. All right. And the phase now changes from more of a distributive breakdown to more of a cumulative and then hopefully markup type of phase. Okay. So what am I seeing going forward next? We're at $1.08. We'll look at where your next resistance line is. This is your 556 descending resistance line from up here. All right. All the way down. And the same rules apply. Like you see, tried to get up to it, couldn't quite even touch it. Reject, all the way down. Didn't even get up here. You got rejected by the 1188 that time, and then you fell under the 1188. So now that we're past the 1188 resistance line, we are hoping that we will come up and at least test and get in here in this wedge. And this is going to look two different ways. And I'm going to show you sort of the difference between two different apex points. And we can stay above or at least flat trade on this green support area. And again, very weak, very thin, nothing strong about it. But if price can remain here and reach the resistance right here, where the support and resistance meets right here, you're talking about a date of June 19th. And that's at the very apex. That's not saying that we have to absolutely get to that level or that time frame to break out. You can break out at any time here. And it's usually around, 80, 85% of the apex. So it could be back in here in May. And again, it's just all lining up with that Fed chair swap. So right now, this is the absolute next resistance in our way for AMC. All right, is the 556 now. So typically when you break one resistance, you may get a shot at it, but I would not be surprised if AMC shoots up, maybe gets up to like $1.60, $1.70 in here, and then rejects back down. And then the next one, you pop out. So the way I'm looking at it is this. yes, at any point in time, you can break out of this, but you have to get up to even get close to even test it, guys. So I've said this before in each video. You know, we can definitely have an impulse move, boom, just like this, come up right through this thing. All right. That is certainly possible because, again, by history, that is how the stock moves. Okay. There is a potential scenario, which is the slower, where it is like, we're going to bounce back and forth in here and then explode out. Okay. This is also another scenario I've broken down on this channel several times when you're trading inside of these resistances. Okay. And you could see this wedge and how it's formed, right? Right there. You could see it in here that the price is only going to be able to bounce so long. Now, the other scenario here to understand is, if we don't survive this line and stay above this area inside this trading, well, then guess what? Unfortunately, you are going to go further down. So, like, let's say it comes up and we come back down, we break, then we're coming down here. And the reason I have 79 cents down here as a support is because of the pivot points. I just locked this in. I think this is pivot support number 2. I'll have to pop it up in a second. I just don't want a million things on the chart. But let's just say we bounce up there, we hit the 160 something, and it's weak, and we get rejected down. Okay? And that is the excuse for you to go down to your pivot low. And that could be the time that and it doesn't have to look like this nice. It could be a straight shot down, like that terminal shakeout I've called about many times on this channel, and then you get the reversal out of it. Okay. So just something to look at going forward to prep your brain for is that this and how it breaks out is, and when the apex is, like, I would say the apex for this region is here, like June. And then I would say if we go below this area and we go and touch the S2, like if this thing's going to go trading sideways, which I really don't think would be the case at that point. If you're down to 79 cents, I would think there would be some kind of impulse move right off of it because I don't think they're going to allow us to accumulate at the absolute low, right? So, that's going to look different. That would look like July the next month right here. All right. However, if you fall below the S2 target of 79 cents, well, look, I mean, if you fell below this line and the price starts to do this, well, then you're in a whole new trading range and whole new zone, and the resistance stretches out further. And that would put you at August, another month out. So each of these pivot point levels, guys, is giving you that different stretch of time. That's why I want to explain it so it's not just a goalpost is moving. I'm showing you technically what's going on. Okay. And speaking of our pivot points, let's just peep it real quick. Let's look at those. All right. And I believe, I don't know if it was Steve or somebody else that mentioned this in the chat about, or not the friggin' chat, the damn comment section about, what about the new pivot points and, what do those look like now as they're updated? Well, these were the old ones, right? From February, and you could see they ran out. Price actually broke down through the S1 in February and then continued downtrending towards S1 here, which is actually for March, guys. S1 is $1.01. I don't know what it is about these 01 type of like battles, 801 or fucking 501, 4, whatever it is. It's just kind of funny, the theme though, that recurs. So we have $1.01-ish right here, S1. And then you have next, it's now moved up, it looks like. So S2 I had labeled, that's what it is. I had S2 for the March pivot points labeled at $1.07. Well, funny enough, we hit that in the March pivot points. That makes any sense? So like you did get down to the S2 level that was set for February, but it happened in March, not actually February. So that level actually just is about to get tapped, $1.07. You're like maybe a cent or so off, right? But now for March, the new downside number 1 would be $1.01, and then number 2 would be 85 cents, which was actually pretty good for, I guess actually no, it's not. So 85, 86 cents is actually lower than this one over here because I'm over here. Oh my gosh, they're so smushed together. So yes, the $1.07. Sorry. So S2 in February, I should say, was $1.07, and then now for March it went to 86 cents. Okay, so that's not what we want to see. We don't want to see the S2s getting lower, right? So or just the S's in general getting lower for the supports. And then your freaking bottom target now has shifted from, yes, what was 79 cents was S3 in February to now S3 in March at nearly 60 cents. Okay. So definitely ugly downside numbers, but I'm telling you, at some point, one of these is going to cause that explosive bottom type reversal, that V-shaped recovery, whether it's S1, S2. I mean, S3 would be an astronomical opportunistic dip grabbing opportunity. And why I say that is because if somebody is trying to exit this fucking thing, look at this. You get down to S3, if you get a chance to, upload or I should say load up, not upload, load up on the S3 leading back up to the impulse, maybe up to S2. Like, I would assume that you're going to ride all the way up to nearly this $1.62, whatever it is. So if somebody was really having a low average and are like, oh, I want to exit now and just recalibrate, you could do that. Or this next breakdown down to that S3, like let's say it's $1.85, whatever it is. When you break out, that might be your chance to blow through the 556 resistance. And if you do that, technically the mini squeeze, I should say, at least initially, guys, would be sorry, I'm a little janky over here. I don't want to do that. Very fucking hard to pull this whole thing up and see everything. So price action is down here. Our next resistance after this 556 is what I'm trying to tell you, would be the 1390 resistance descending. Okay. So let's just say you're able to run from this level 2 here, this S2 at 85 cents and load up. I would assume that this next impulsive move might drive this stock at least up to this line here. All right. Could definitely still keep going, and there might be a pullback even in the midst of that type of move. But dude, you're talking like a 5x, 500% move from S2 and however that is going to look. It could definitely be like a massive straight up candle. If it goes straight up, you're talking about hitting like $6-ish. All right. And, there's a lot of people that are telling me, well, fucking these price targets are bullshit and all that. I'm telling you $6, guys. I'm not telling you 20 or 30 yet. But I'm saying, though, like, first step would be to get up here. And this is going to be a huge breaking point, because if this does not break through or have a pullback and another attack and continuation past this descending trend line, you're going to have another massive drop to the downside. Okay. So if this thing tries to break through and it can't, and you'll come all the way back down, maybe a 50% drop or whatever it is at this point, 90% drop. It could be crazy. And why I say that is because look at what is going forward with the descending resistances. You just showed that you couldn't break this level. So this is going to be an area you're going to have to maybe take multiple stabs at to break through it. And again, it could also look like something like this, where reject, maybe you do pull back down to, this $3.94 level, say roughly, and then you go back out and then maybe you do get the breakout. But I'm saying if you get trapped under this resistance, look at how long this could go on for. I mean, you could be waiting another year or two, 2027, 2028. It's just going to depend on when is this going to get broken. But I would assume, though, that if you struggle to break this multiple times, it's going to send you into a whole another accumulation range. Maybe it's $3 to $4 in here until you get the breakthrough. I'm not saying 2028 to be exact, but I'm showing you the descending resistance, okay? And how much space you have in here between whatever the new support's going to be and the resistance. All right, and that could change. So let's say, this $4 right here that I have drawn up, it bounces down. What if this is like your new support, I guess, right? Something like that. What if this is where the stock kind of trades on going forward? It becomes like a nice secondary kind of accumulation phase. Well, still your apex is going to push you into January 2027-ish for a breakout, right? It's going to start to get pinched down. Or it maybe turns into something like this, right? Like a new wedge. So then you start bouncing around in here. All right, I'm just throwing these out at you so that you could see how these time frames evolve. Now you might be talking about March 2027, depending on how the support looks, right? If it comes down to something like that, I mean, yes, you have a new trading range now, and also there's going to be like a new bottoming point for when this apex next hits and you break out. All right, I know that's a lot to consume when you're breaking down these directions and patterns, but like looking at our friggin' pivot points, guys, I'm just showing you like these are the levels now. And again, your resistance targets have now evolved as well. So looking at your pivot line, it's right there. The stock is just trading under the pivot line. So if we get the bars to now close above this pivot line, we are most likely heading up to R1, R2, or R3, or even surpassing all of them, right? And then having some kind of retest. All right. So the new targets for the upside in the immediate sense, not grand scheme, but immediate sense, is going to be 141, 169, and 184, it looks like, for R3. And look at where R3 is. It is sitting right next to the 556 resistance, okay? Just lines up perfectly, okay? So, again, those are kind of the dates and times, guys. And the targets in the immediate sense, what we need to do to break out of this thing to get to the next level. Of course, I'd love to see a melt up fucking beam through this entire chart, but I'm just trying to keep it like one step at a time, okay? And the progression, and also what the pullbacks could look like, all right? So, long story short, right there, those are your pivot points. Your EMAs too are starting to tighten up. So, looking at the 9-day moving average, the 9-day EMA, right here, tightly coiled and pressed up right against it. But again, you got to have price. You can see the wick here on today's candle. It's right, it's closing, it's wicking below this 9-day EMA. So, still being suppressed under the 9-day EMA short term wise is not really good, right? We want to see candles close above that so we can get crossovers happening. I said it in multiple videos at this point. So you guys should have that ingrained in your skull. Okay. In the same vein, you have the 200 EMA also coming down now. It's at $2.31, round up to 232. So $2.32. That's where your 200 EMA is. And if we get above that, then that's when we could really start to see massive moves to the upside, because that would indicate that now the downside macro wise is over with, and you should start to see these all flipping above, which is going to create that bullish momentum. So EMA wise, technically, yes, we're under it, but I still love the tightness of the position where we're at, and seemingly like a couple days away could change this. We could have a massive green day, and that could curl this thing up real quick and cross over your 27, and then so on and so forth with the rest of them. So your EMA bands look absolutely really good still, even though they're downtrending and we're trapped under the 9, but they're still so fucking close. I mean, it's not like, oh my lord, they're like so spread out. We have to fight just to get up to, the freaking 27 or whatever it is. They're very tightly wound together still. And an impulse move can happen at any point, and they can shift this thing and flip it on its head, right? So those are your EMAs. Let's take a look at my fixed range VP tool. You guys know I love using that one. Let's pull it up and get a little closer. All right. Fixed range VP. We're going to run it from the top of this channel that we've been trapped in, from the 408 level. And we're going to run it all the way down to the low. Let's just keep it current. Let's go here. Okay. So again, I've explained this in detail, and I will not do it again. I will just give you the highlight reel of it. So in these volume bars right here in this range, there is a volume pocket, okay? Right there. There is weakness in here, meaning to the upside. So when we get past this dotted blue line that you see right here, this is sort of like the median line that we need to get through. That is at $1.60 flat, okay? If the price can get above this and hold on this bar, because this is where the resistance now is. The resistance now lies here, okay? You see how these bars are all much bigger than in here? That's going to be resistance for us, or where the price could get trapped in this range, okay? So what we want to see is a break past this, and the beautiful part about that is, guys, is if we can do that, let me go back to my polyline. If we can get a breakout past this level, once you break this bar, there's nothing here. Look how weak these bars are. That would indicate to me that you could get a straight shot up to at least this next big bar, which would be your, your next resistance, right? But guess what? I said it last video, is in doing so, surpassing these bars and getting up to here, well, look where it leaves you, right? Let's just say this happened like Monday or some shit. Look where that puts you. So now we have broken our 556. Again, a key level I just said we really, really need to break through. So if we get that, we have accomplished that next step, okay? And who knows? You could get all the way up into the gray area, back up to the freaking 408 up here, okay? Yeah, definitely. You could definitely get a massive, mini squeeze progressive type move. But I'm just keeping it a buck right here with this resistance being here. And I said it last video that if you get up to here, this could be a resistance that pulls you back down to this level here, okay? Where you test the 556 from the top, not underneath, but coming down from the top. And if you hold, then you would exceed past that. And I do believe that would be where we see a progression or a stab towards the 1390 line here. Okay. So just something to kind of give you a sequence of events that may happen on a smaller scale. Because again, once we break past a 1390, it's going to be curtains, for, anybody on the opposite end of this thing. You're going to start to see this thing really melting up through those gap fills that I talked about. And that's happening at like, what I say, guys, last time, I think it was like $13 or something, or $20. I think there's one, 19, 20, something like that. So that's where we get jumpy, is past this resistance, because after that, it's pretty much a straight waterfall cliff that we fell off to the side. Okay. But right now, that's the progression. That's what we need to see. And that is where the volume, the fixed volume profile range is showing us where we could see zips right through that. Okay. Up to 273, 280, even at the top of the bar, 287. Doesn't matter. This resistance right now where it stands, guys, and it's obviously descending, is right at $1.80 essentially, right? If we were to go straight up today, you're looking at, $1.81, $1.82, all right, to come straight up to it. So the price is descending at that resistance line. So it's getting a little easier to at least attack it, especially when we have weakness in the pocket right here. Okay. So boom, that is done. That is our VP fixed range. I want to delete it. I don't want to delete the whole freaking thing. Okay. So that's our fixed VP range. Looks very good. Again, gearing up, especially with this sideways accumulative situation happening with the price, and the candles are staying relatively flat. They tried multiple times this week. $1.10 was being pushed. And even still, like, we broke under 110, but like $1.08, $1.09. I'm really curious to see how long this goes for. Like, if we really, stop here and trade in this range for a while, like 3 to 4 cents, I mean, that would be kind of funny. It'd be a straight barcode for, a month through April. But I would like to see that progression start to kick back up this and through that pocket I told you value-wise. Okay, then I'll start to get excited when we go to approach this 556 up here. All right, so that is your pivot point, EMA, VP, RSI, no brainer. Look at this, very flat, looks just like the stock, especially if you line this up with this. Literally identical in terms of being in the near, basically oversold region, we'll say. Not totally oversold, but very, very low right here, 30-ish range, right? 32 maybe, 33. So riding this out for, oh my gosh, what is this? The whole friggin' year of 2026. We've been in the oversold or just very close to it, all right? That tells me that there's some accumulation happening and they're gearing up for a big move, right? And all of the apex points that I showed you in dates line up with that, okay? So I think that's really the gist, guys, of it. I want to cover MACD. I know it's kind of crazy. I go through all these, but very important. Interestingly enough, like, we flipped green on the friggin' MACD. And people are like, what the fuck? How are we flipping green? Like, shouldn't we have this bullish momentum and stuff? And it's like, we're still hitting new all-time lows. Again, that is exactly the recipe for when the stock is being accumulated. Okay. So You have the MACD line. It's crossing over the signal line. It's going just below, back over, just below, now above the signal line. But you see here, bullish volume is depleting or flattening out. So not the end all be all, but I like how this is trending upward. And I think, again, if you can get, you can see back here how this thing was really down bad, the signal line in the MACD, and they were just kind of curling up and then riding past the actual MACD bars. Once we see that happen again, then we know for sure that this next move is going to be obviously fucking bullish. So for me, MACD still looks like it's in a nice flat neutral zone. Even though we are hitting new all-time lows, it's not super duper bearish like kind of situation. We have not seen the terminal shakeout yet. And I'm ready for it. I'm ready for a super duper sharp knife down by 20, 30 cents. I don't even care at this point. Because guys, I'm at the point where it's like I'm writing this shit out. I don't care what price it goes to. If it goes bankrupt somehow, fuck it. I'm not gonna be sitting here crying like a baby because, oh, I should have got out at a fucking dollar. Like, I don't know. It doesn't make sense for me to do that at this point. So I'm just seeing when this bottom hits, when are we going to get the V-shaped recovery spike out of it? And I'm just riding it out, like I said. So we'll see what happens going forward in the weeks ahead. And again, looking towards like before May, because you know how the market is. Like I said, it's very forward looking. So I'm looking at what's going to happen going into April, between now and April, knowing that this is coming. All right. And again, the Iran war maybe being concluded might be, also this is like a big deal now, and that's part of the push. That might be something that kicks it off too. Depends on how long this goes on for. But guys, it looks good, man. I mean, we're still in every type of range that we thought, give or take, 5-10 cents with the new pivot areas. Okay. But generally still in the same vicinity of each other. And I want to see this thing start to flatten fully out and then progress up. All right. So I hope that kind of answers a lot of questions you guys had in the comment section, and kind of gives you just the clarification on where we're at, guys, and just from the fundamental news aspect. So you guys have anything else you want to cover, drop the comments down below. Let me know, guys, and I will jump back on it. Hopefully I'll get back into the routine next week and just go back to my weekly scheduled routine with our video uploads, okay? Because it's a lot fucking easier to update it when I'm not having to go and do 3 weeks worth of content packed into one video. All right. And I think right now we are sitting at 37 minutes. Not actually as bad as I thought it was going to be. So I'll shut up and get the freaking outro out the way. But guys, if you're new, subscribe. Follow me, guys. It's a logical mindset that I approach this market with. I'm not here to bullshit or spread fantasy dreams or prophetic dreams or all the fucking weird stuff that I see going on freaking Twitter from some of these other people covering this. And I say covering very loosely because they're not really covering anything. They're just making up shit. But I give it to you guys, cold, hard facts, straight to the point, and try to prepare you the best way that I can, all right? So I appreciate you guys. I'll see you in the next video. If anything changes, like I said, I will give you an emergency update, all right? Everybody take care. Have a great weekend, guys. I'll see you next week.